Here we go. Good morning. Good morning. I hope everybody's doing very well. Today is November 3rd, and we are live. This is Travis Witherspoon from Carter Cow Trading on Instagram, Trade with Travis on YouTube. Hope everybody's doing very well. Let's go ahead and go through the disclaimer. Then after that, let's take a look at some overall trading opportunities. I'm not a CT. I'm not a CT. Jeez, let's start that over again. All right. I'm not a CTA. So I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind, and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, show myself to everyone that's on Instagram. Hey, how you doing? Show myself to everyone that's on Facebook. Hey, how you doing? Showing everyone to myself on YouTube. Hey, how you doing? I hope everybody's doing very well. Today is November 3rd, also called Super Tuesday. Super Tuesday is the day where everybody gets out and vote. If you have not voted yet, please make sure that you end up taking the time to be able to, obviously, do your civic duty, do your right, and everything else like that. Go ahead and get done with your vote and everything else. I don't care who you vote for. Just make sure that you end up voting. I mean, obviously, that's the right that we have to be able to do. So just try that and get it done and everything else like that. So that's my spiel when it comes down to that. But I hope everybody's doing very well. Let's go ahead and take a look at the charts. Remember, yesterday we ended up talking about we said that we probably weren't going to end up making any trades until about Wednesday. And I kind of stuck to my guns on that, even though I really like some of the positions that I ended up looking at, especially with the Eurozone a little bit earlier today. I'm going to talk about why I like the Eurozone a little bit earlier based off of what we're getting ready to talk about right now. Remember, yesterday we ended up talking about the Eurozone ended up having their manufacturing market PMIs. And in Spain, Italy, and Germany, they actually ended up doing very well. Compared to what they ended up doing the previous month. We looked at what happened based off the United States dollar. They actually ended up doing very well with their market manufacturing PMIs as well. But because the Eurozone was basically taking a step back from last week, they actually ended up having a strong retracement when it came down to an overall move. Cedric, thanks for the like, man. I do appreciate it. We're taking a look at what's happening today. Obviously, today is today's a fundamentals day. Today's a fundamentals day because we have three high impact news that's going to end up coming out between three different countries. Obviously, we got Governor Lowe that's going to end up speaking. I believe he already has spoken a little bit earlier today. We have our presidential election that's going to end up happening all day, but we have to keep that in mind. Then after that, we got retail sales and unemployment when it comes down to the New Zealand dollar. So we have to keep that in mind when it comes down to what's going to happen throughout this overall phase. I am not going to end up taking a trade on the US dollar again. So we will take a look at the overall pairs. We'll skim through them and kind of take a look at examples of what's going on. But me in particular, going through and seeing how this day is going to end up reacting and seeing what's going to end up being the movement after a little bit later on today, like 9 o'clock, like 10 o'clock today, once there is a determined winner on who ends up winning the election, will give us a clear direction about what's happening with the market. So instead of me guessing and trying to figure out what's going to end up happening, I'd rather just go ahead and just allow the market to be able to do its thing. Figure out where the big banks, figure out where everybody else is when it comes down to their overall trading. And then after that, basically react based off of that. And sometimes that's the better play instead of trying to be early and trying to figure out or trying to guess about what's happening. I'd rather know. And then after that, if we can be able to get into a position, then we will. If we don't, then obviously we won't. And that's the biggest play that I think is going to end up being the best thing to be able to do at this particular point. All right, so with that being said, let's go ahead and go into the big three. You do not know what the big three is. Obviously, we end up looking at the U.S. dollar index. We end up taking a look at what happens with gold, and we end up taking a look at what happens with oil. Basically, what that does is it allows us to be able to figure out between those correlations, which pairs are going to end up being strong, which pairs are going to end up being weak, and which pairs we should look at being able to trade, and which pairs that we should look at being able to get away from. All right, hopefully that makes a little bit of sense when it comes down to overall trading. So if we look at this from a weekly perspective, we end up talking about on this one, we expected that the market was going to end up being in some type of consolidation because we have seen this overall movement and it's happening for the last few weeks. And rest assured, we will get an answer at some point in time over the course, excuse me, over the course of the next few hours, more than likely. What we see is that the market was basically in resistance right around that 12,080 area to the 12,000 area. And the market yesterday, we were talking about, was at the top of resistance. I also end up saying that if you're looking at being able to scalp the market or being able to make any type of sales, yesterday will be the day to be able to make some type of sales because the market was at the top of resistance. Remember, consolidated plays, there's only two different rules. You buy support, you sell at resistance, right? We can see that based off of this move a little bit earlier. Right, we end up saying initially when it came down to this move, this was very predictable that once this market ended up basically rejecting off of the top of this resistance, that the market was going to end up falling. And subsequently, what ended up happening, the market ended up falling. So once again, if you're one of those people that was a little bit more aggressive on trades on the US dollar and being able to trade against the US dollar, then obviously you end up making your money, at least making a good portion of it, as we're looking at it right here. Now, if you could be able to ride it all the way out to the bottom, then do it. If not, and you only like being able to do half of a percentage when it comes down to consolidation trades, or you just don't know what's going to happen with the market a little bit later on today, then obviously you can be able to take your profit now and be able to roll on from there. But obviously, we've seen that the market has hit support and went to resistance a few different times. So I do not expect anything less when it comes down to trading this. All right, let's take a look at oil. We also end up saying with oil that we expected that the market was going to end up falling down to $31 a barrel, but we had to see that the market was going to end up popping up to the upside. Once again, a very predictable move, but because we were looking at what's going on with the overall election and everything else like that, and because this market was basically retracing and basically doing a retest in this overall zone, I decided not to be able to make this overall play. Market ended up going from the overall low of $33 a barrel all the way up to $35 a barrel. So it ended up going $5 for its overall move. If you was a little bit more aggressive on this move and you end up seeing this overall play in which we said that it was in the buy zone, so we did expect upward movement, then congratulations, you end up profiting off of this move. Now, what are we looking for overall? I do expect that this market eventually is going to end up falling. And I think that it's going to end up falling right around the $40 mark to right around the $41 mark if it goes back up to the top of resistance. Currently, right now, we can see that the market is coming out of the buy zone, so we should probably see a little bit more buys. I think that it'll be a little bit, probably be a little bit stagnant when it comes down to the move because the market is basically in the sell zone. But this market has pushed up, and the bulls have basically pushed past the $37 mark, basically end up turning that past resistance into future support, and then after that started to push back up. If this market breaks past 39.72, then the market will end up being somewhat bullish. And now we have to see if this market is going to end up being another consolidated play right around the $41 mark. So if you're in this overall, overall trade for right now, the one thing that I'll be looking at is basically this managing your overall buy at this particular point. The market is in the sell zone. If it breaks a counter trend line break, then get out of it. The market maintains and it stays above this overall trend line as a whole, then you should be okay when it comes down to being able to just remain in your overall buy trade from there. For sellers that are looking at being able to sell it down to the $31 mark, I will look at this counter trend line break, see how the market is kind of reacting based off of this on the 2 hour and on the daily. I think the daily will probably end up being more important than 2 hour at this particular point because the daily is in the buy zone. So we'll want to wait a couple more days to be able to see how the market kind of reacts before kind of making a move and being able to place in a sale on this overall pair. Now, once again, a little bit later on today, there could be some big news based off the election. There could be some big news based off of what's happening with oil, and the market could basically drop. But we have to be able to keep that in consideration and ask ourselves, is that a false break? Or is the market really going to end up moving? Okay, so that's where we're at when it comes down to that. Let's take a look at let's take a look at gold. Gold at this particular point has been retracing towards the upside. Basically, it's reacting with this uptrend line. Once again, I expect that the market is going to end up going up in due time. for being able to break out this overall position. But once again, a little bit later on today can be very important to how the market is going to end up reacting. If we look at the weekly, what's happening on the weekly, if the market is in the buy zone, I do expect that there's going to end up being a breakout of this overall move, because the weekly is in the buy zone and the daily is in the buy zone when it comes down to this move. So we do have time frame alignment. The long-term trading has been towards the upside. So once again, with the weekly and the daily being basically in alignment, even though we're at the bottom of this overall trend line, I think that we end up getting value prices to be able to buy up when it comes down to this overall move. I think the daily D extensions at 1933, if the market keeps on pushing up towards that level, then obviously you have to take that seriously. The one biggest thing for people that are a little bit more conservative will end up being, okay, how is the market going to react off of 1900? If the market starts rejecting off of 1900, it really doesn't matter about what's happening with the daily. The market's just not ready. Okay, so we just have to pay attention to how the market is going to end up reacting off of 1900 before deciding to be able to buy. If you're a little bit more conservative on this one, like me, at this particular point, I would wait for a breakout, a retest, and then after that, a push back up before actually getting back in on this one. So gold is expected to be bullish short term, but if you want confirmation, I'll wait for that counter trend line break. The market has broke. Take a look at the currency strength chart right now and see who's actually up and see who's actually down. Currently right now, we can see that the Australian dollar is up. Now the Australian dollar is up because we end up looking at what happened with the interest rate decision, and the interest rate decision end up being changed to 0.1%, which has been the lowest in a while. If we look at who's actually the benefactor of that benefactor, or the weaker pair because of that strength, will end up being the Japanese yen and the US dollar. We talked about looking at Australian dollar weakness yesterday, and those pairs actually those pairs didn't play out the way that we thought. But once again, I didn't take any position, so just kind of looking at it, kind of make a decision off of that. Well, let's take a look at the Forex screen, and we can kind of get a little bit more insight on what's happening with that. We want to look at pairs that are at least right around that 18 mark before kind of making a decision. Currently, right now, we can see that the US CAD is basically at 18%, but Stochastic is at 76. I'm not looking at that one. We looked at what happened with the Euro Aussie. We're trying to look at being able to sell, but the market is at 18% when it comes down to this, and the Stochastic is at 17. That's not a good sale right there. Let's see. If we look at the, let's see, which one is in the buy zone? If we look at the Euro Aussie, well, in this case, Australian Euro, we can see that the market is at 84%, meaning that the Euro should be falling down. Okay, that's the same thing as the Euro Aussie. I still don't like any pair right now, just from an ADX momentum standpoint. We could look at Pound Aussie. Let's look at the Pound Aussie. Let's see what's happening with the Pound Aussie. We're gonna adjust the numbers a little bit, and I want to see what's happening with this overall market. Okay, so it's above 22. The market's at 36. It's at a neutral position. I'll focus in on the Pound Aussie first. That's the overall pair that we'll take a look at. Then after that, we'll get into the US based pair. So see if we can find a trade. Possibly may be able to find a trade at least today. Both of these are away from the US dollar, so it may end up being an opportunity there for us being able to find some type of trading opportunity. So if we look at the Pound Aussie, what have we been trying to do? Initially, we were trying to look at being able to sell, and I need to get rid of all of this because, quite frankly, there's so much stuff that's actually gone on since the last time I've done it. So I'm going to start over on this one real quick and then take a look at what this market is. This market has been falling since basically 2001. So we'll kind of get a quick example of what's happening with this market before kind of moving on. Market went to A to B to C. The market should expect to fall all the way down to 1.12 at some point, but that's not going to end up being today. So we're going to look at that high point right there. Going to go to the weekly. We're going to take a look at that overall arrow. Dive down and get a little bit more information. Okay, A was broken right there, so those don't matter. So we're going to focus our attention right here in this overall area. The market is still considered to be bearish. All right, so with that being said, now what we're looking at, we can see that the market is in the sell zone. We see that the market has basically did a slight retracement. That retracement is not strong enough to be able to call this market healthy, but it is enough to be able to kind of get an idea about what's happening with the market overall. So what's the expectation? The market is expected to be able to fall from this movement right here. We have here A to B. We don't have a fractal yet, but we do have a position where we should think that the market is going to fall. Eventually, the market will go to 1.6182. So going to look at this position right here. 1.6182 will be the overall take profit value. And we will go through all of the U.S. based pairs, so try to get a chance to be able to go through all the U.S. based pairs. But weekly, the extension 1.6182.7. I'm going to change this and make this a little bit smaller. So essentially, we think that the market is going to end up falling. The market has not broke a counter trend line break as of yet. Even though we're looking at this and we see that the market was basically down today, if we look at it overall, the market has not broken a counter trend line as of yet. This pair, even though it's in the sell zone, has not confirmed that it's ready to be able to fall. Now, if we look right here and kind of get a little bit more of an idea about what's happening on the daily, we can kind of get a better example of what we need to do. But overall, this market has not proven itself ready to be able to initially just fall as of yet. So this is what we're looking at when it comes down to the overall daily. We can see on the daily that the market has had a slight retracement from this overall movement, where it's expected to fall down to 1.802. We have a counter trend line break. If we want to look at being able to sell on this market, we know that we have momentum based off of what we just looked at with the Forex, based off of with the ADX. So the market should expect to fall. Okay, so we know that the Australian dollar has been strong. The question is it going to be strong enough to be able to give us an opportunity to be able to get in? We're going to focus in on the 2 hour, kind of get a better example of what's actually going on. We can see that there's a take profit right now at this particular point that's a little bit closer. Let's see, we'll switch over and go to the chart from here. We're going to say the changes. If this was earlier this morning, I would be very excited for this overall trade. Currently right now, I see that we're basically at 47%, so we are in a no trade zone for this overall move. If we're talking about an overall take profit value, currently right now we're in an R3 zone. We're about 80 pips away from the stop. The quickest or we really don't have an area where we could be able to place our stop loss at. We don't have a fractal high that we can be able to go after. The highest fractal high was at 162 pips. So I'm out of this market. I'm not going to look at being able to trade it, but we can use that overall to kind of see what's going to happen a little bit later on for us being able to go with that. The market has already done moves at this particular point because typically it moves 150 pips. Since this morning, the market has moved 175. So with that being said, I think that the market is going to have a retracement start to push up to the upside before actually falling to the downside. So this market will fall without me when it comes down to that overall pair. Hopefully that makes sense on how we end up doing that. Let's go to some of the U.S. dollar pairs and kind of see what's actually going on with those. I want to focus in on the Euro United States dollar first. We end up talking about yesterday how this market was going to end up, or how this market basically was at consolidation. And we said that this market was going to fall down to the 1.16 area. That's exactly what ended up happening. Once again, we said that we wasn't trading, even though we liked the position. We said that we wasn't trading because we wanted to see what the market was going to end up doing. This market ended up doing a double bottom, which meant that it hit the bottom of the actual move, went back up and hit the bottom again. That is a strong confirmation. If it ends up hitting twice, that the market is going to end up popping up to the upside. Now, what do we expect? Let's go back and let's take a look at the weekly and the daily. The weekly is in the buy zone. We expect that the market is going to go up. We're looking at a crown fear for its overall position, and we're looking at slight consolidation for its overall movement. That consolidated play is expected to be able to push back up to the upside. The market is in a healthy position to be able to move, but the market is still considered to be in consolidation because the market has not broke out of resistance. So once again, that's two things that you can be able to think about. One, you can either you could have ended up buying yesterday and could have hoping for the best about what happened with what's going to end up happening with the election, or you can wait for the market to be able to give you confirmation by breaking out of this overall position towards the upside giving a retest, and then breaking out that way. I'm actually a little bit more interested in being able to look at the confirmation at this particular point because I don't know what's going to happen a little bit later on today. And instead of not knowing what's going to end up happening and then just trying to guess, what I end up deciding to do is basically say, okay, well, if that's the move, I'm just going to end up waiting for the best position to be able to get in after the confirmation is broken. Okay, so that's where we're at when it comes down to weekly. We take a look at the daily. The daily is in the buy zone. We do have a counter trend line break. We do have a engulfing candlestick pattern right now as we speak that is actually forming. If this maintains and holds all day, then that means that the market will be considered to be short-term bullish. That short-term bullish move, typically when an inner trend line breaks a outer trend line, it will gravitate. I think that the gravitation will end up taking it to the 1.18 area. Okay. Now, we have to see if that's going to end up happening. If you're interested in being able to trade it that way and forego saying that the market is in consolidation, then trade it that way. If not, and you just want to look at how the market is basically, if you want to be a little bit more conservative, kind of like where I'm at and just trying to see how the market is going to end up reacting, then I just let this play out and then go from there. Now, does that mean that I'm giving away pips and giving away points? Absolutely. But at the same time, I think the conservative route right now and being able to see how the market is going to end up reacting to the elections tonight, I think it's the most important thing compared to just trying to go after a certain amount of pips just for this certain point in time. My feelings may be a little bit different than yours, but that's how I feel at this particular point. Right now, let's take a look at what's happening with the U.S. Canadian dollar. We talked about this market being in the sell zone. We talked about this market actually being bullish for its overall move. Remember, the market is expected to go up to 1.3580 as a point of control, all the way up to 1.36 as a move toward the upside. Now, we also said that the market was going to end up dropping at some point. Now, that's what has happened. On the weekly, this market is still considered to be, if you're looking at it long-term, weekly is considered to be bearish. We're looking at this from a short-term perspective. From the daily, we expect that this market is still considered to be bullish. Now, we have a strong support area that we have been looking at right around this 1.31 area. So if the market keeps on dropping down about 58 pips to the downside, then you should see that should happen. Now, what's been a factor why gold has been moving? It's actually been oil. Oil ended up having a strong day yesterday. Typically, when you end up seeing oil have a strong day, then you typically see the Canadian dollar have a strong day. So we have to pay attention to that overall movement as well. The question is, should you get into this overall sale right now? Well, that's a matter of what your thought process is when it comes down to trading this. If you're bearish, absolutely not. If you're bullish, I will wait still. I'll wait for the market to be able to give you a lower value right around that 1.31 area, in which we've had support to be able to happen a couple times over in this area before. So I will kind of wait for this market to kind of fall down to these support levels before actually being able to make a decision on if I'm going to end up trading it or not. Okay, so that's where we are when it comes down to that. Take a look at the US yen. The US yen actually ended up pushing up bullish yesterday. Remember, we expect that this market is going to end up falling. Based off the weekly, we expect that the market is going to end up falling down to 101, and then after that down to 99. We said that if this market ends up breaking past 104 to the downside, then this market was going to truly drop. But we also see that the daily is in the buy zone. Now, I think I'm looking at that and I'm taking that with a grain of salt when it comes down to how this market is going to end up reacting, only because, once again, we don't know what's going to happen with the election. But we do know that 105 to 104 has been a strong area of support when it came down to the bulls basically pushing up at this point in time. The question is, based off of who ends up winning, is this market just going to end up falling? And if it does fall, you have to keep your eyes out on it and then know that this market could fall all the way down to, if it breaks past 104, then it's definitely going to end up falling past to that 101 area. So we have to keep that in mind. As the market is going through its overall zone, it's at 47%. Remember, we want to be able to get a sale. Anything above 105, I think, is a very good number. If you got in yesterday at that particular point, and if the market maintains and holds, then great job. But overall, I would kind of look at being able to pay attention to how this market is going to end up reacting again and seeing if it can be able to push up a little bit higher. Anything above 105.20 to the 105.50 area is a very good area of being able to get in, especially if the market continues to fall on its same path. that it's been doing. So right now, just waiting for a better value when it comes down to US yen. US Swiss franc has been pushing bullish. We see that this market has been falling into this overall resistance level. We see that it rejected off of 92 and then since then has fell back down. It's kind of making more of a head and shoulders pattern. If you're looking at it from that overall movement, we can see that here goes our head, there goes our neckline. Neckline has actually failed. Okay, I'm sorry. Let's try that over again. That would not be that. There will actually be a crown on the 2 hour. Which means that we had this A to B to C to D move. It didn't complete the overall D extension, but we're seeing something like that for this market falling and being able to go from there. That will be what I'll be looking at if this market once again falls and looks to go to the downside. If this market does fall based off of what we're looking at right here, biggest thing that I'll pay attention to is there a counter trend line break? Right now, that answer is no. Is the market in the sell zone? Yes, it is. Has the market been pushing bearish long term? Yes, it has. Where's the market going to end up going based off of that movement to the downside? It'll be 86 if it does push down to the downside. But if it maintains support, then obviously you'll look at being able to buy right around the 90-50 area as we've done previously. So once again, there's no answers that hasn't been given. The stochastic is basically telling you that you should be looking at being able to sell, but once again, anything can happen a little bit later on today. So kind of paying attention to how that's going to end up reacting first before deciding that I'm going to end up trading to the downside. Okay. We still have a lot of time. Today is going to end up being one of those big days. Okay. Got a couple more pairs to be able to take a look at. Australian dollar, United States dollar. We talked about how the market ended up hitting support at 70.24. I said that if you were looking at buying, I would buy up to this overall midpoint area. If you did that yesterday, congratulations. You got filled and basically got out of it within an overall day. So congratulations if you end up doing that. Once again, I said that I wasn't going to end up taking the trade. I stuck to my guns, even though, quite frankly, missed out on a few pips on this one for this overall position. I wanted to see how the market is going to end up reacting. But overall, that's a good 126 pips. If you end up taking that trade that we end up talking about or suggesting from that consolidation portion, then congratulations. Good job on that one. All right. Same deal. I expect that the market is going to push up to right around 72 if it keeps on going in its overall path, but we have to pay attention to that. Now, what I am interested in is the pound United States dollar. As we look at it right here, we said that if this market ends up breaking the trend line, then we have an opportunity of being able to get in. This market fell all the way down to, what was the low? 128.54. What was the A? 128.62. So the market actually touched the A, but it never closed below the A. So the market is still expected to go up to 1.32 for its overall move. The market is getting close to the buy zone, and the bulls have basically pushed up since then. This market has moved at a range of 85 pips since this morning. On average, the market moves right around 115 pips. So it's about 30 pips left for its overall movement that's still left in there. Currently, right now, the market is in the sell zone. We have a breakout. Remember, once you end up having a breakout, you look for the retest and look to be able to buy from there. So I will wait for this market to be able to fall down. And if this maintains and be able to buy right here in this area, then you have a buy trade that you can be able to take up to the long-term 133 area, which is plenty enough pips to be able to get in at this particular point. It's about 400 pips from there. You got in off of this long wick and you basically end up riding it out from there. Congratulations. It was a gamble, but that was a very good move to be able to take. All right. We have time for one more pair, which will end up being the New Zealand dollar, United States dollar. That's all gone, baby. All gone. All gone. So, taking a look at the New Zealand dollar, United States dollar, the market is basically in a sell zone, but the market has been consolidating. Remember, there's two rules. You buy support, sell resistance. Market is moving up to the overall resistance area right around 67. Currently, right now, that's about 25 pips away. If you're looking at being able to sell at that particular point, then you can look to be able to do that from a daily perspective and be able to sell all the way down to the 60. Be able to sell down to the 65 area, 65.20 to be exact, which is about 100. And the market keeps on pushing up. Let's move that back again. Put that back where it needs to be. That will end up being essentially right around 100 and right around 200 pips. So if you can be able to get a higher price and the market keeps on pushing up to that area, then I'll look at trading it. Right now, the market is in a no trade zone, so I won't trade it at all. Once again, there's very simple rules when it comes down to that. All right, so that's pretty much it. Went through the U.S. dollar pairs. Want to see how everything happens a little bit later on today before we end up making a decision on what we're going to do for our trading. I do like what's happening with the pound. I would like to see how the market kind of rejects off of the pound and see if we can be able to control and maintain that overall move. Same thing with the euro dollar. If the market maintains and basically bounces off that overall area, then that would be a good trade. But that trade will end up happening right around will probably end up happening right around 2 o'clock this morning. If not, it will probably end up happening right around 9 to 10 p.m. Eastern Standard Time. Before I actually end up making the decision. If you like what we end up doing, please make sure that you like the Carter Cow Capital Business page. Please make sure that you end up subscribing to Trade with Travis on YouTube. Obviously, subscribe with what we're doing on Instagram. I do appreciate everyone being able to watch and hopefully be able to gain some information for this overall video. Like always, plan your trade, plan your trade, trade your plan. Get out and vote today, and enjoy the day. Everyone, y'all have a good one.